Does it make sense to think of a war costing us hundreds of billions of dollars and each family, therefore, thousands of dollars? And I think the answer is yes. And this is where we get to the third receipt, which is looking at financial markets. So, look, the stock market's not GDP, and a fall in stocks is not the same thing as losing your job. But markets are useful because they can show us what investors think the stakes are. And they're not treating this as a tiny military expense. When the US bombed Iran, look, the president actually did it in the middle of the day in Iran, but at night on the weekend in the US, so US markets were closed. We couldn't see exactly what happened, but we know that what happened is over that weekend, stocks fell about 0.7%. That alone is a sign that markets thought the consequences would be much larger than the Pentagon's first week bill. Let me explain. The total value of the S&P 500 is about $60 trillion. 0.7% of $60 trillion is about $400 billion. 1% of 60 trillion is 600, yes, it's $400 billion. If you turn to the international markets, the story is even more concerning. Since February 27, the US stock market is down about 2.5%. So if we said actually that the effect was not just that initial sell-off, but the news that subsequently followed, 2.5% of 60 billion is over $1 trillion.